Hey guys, Dave Keller here with Market Misbehavior. A new addition to the YouTube channel is a series I'm going to call One Chart. And essentially, every time I interview a strategist or analyst, someone, I always like to ask them, "What's the one chart? If you had one chart that would help you understand what's going on with the markets, besides the S&P 500 kind of straightforward chart. If you had one chart, what would it be?" And that's often led to some really interesting ideas when people talk about things that I might not normally look at, and a number of times they've become part of my normal routine because I've learned from someone else in terms of what's important to them. So I wanted to just start today by sharing one chart that I think you should pay attention to, and it's a chart of the Ag ETF, which is the iShares Core U.S. Aggregate Bond ETF. So it's a sort of a proxy for bond prices. And the reason why I think it's a key chart, number one, it's tracking sort of this, parabolic rise in bond prices as we've continued higher and higher. Yields have gone down, the 10-year yield going down, 150-ish. And the reason why this is an interesting chart, number one, just to track that, meteoric rise and the continued uptrend, higher highs and higher lows. But I also think it's illustrative of a really interesting technical phenomenon, which is the extreme overbought condition. And essentially what happens is when traditionally, when the RSI goes above 70, and again, RSI is a simple measure of momentum, sort of like taking a z-score of a price data series. So essentially, it's normalizing the price, taking the directional trend out of the way, and just looking at the mean reversion and looking at where it reverts to sort of that average movement, which would be an RSI of 50, right in the middle of the range. When the RSI hits 70 or goes above 70, a lot of times we'd say that's overbought, meaning the market's gone too high too quick, and as a result, you'd expect it to come down. And when the RSI becomes oversold, like it did here in April of 2018, it's gone too low too quick, and as a result, you'd expect it to go back up. Now, if you look over time, a number of times, you'll see it become overbought and oversold, and a lot of times that will coincide with peaks and valleys in the price. But what's happened here is toward the end of 2018, this is when the U.S. equity markets bottomed in December. You can see the bond prices obviously have continued higher and higher. And the Ag ETF, the TLT, and other bond price ETFs have gone, just vertical, right? Continuing this crazy uptrend of higher highs and higher lows to new highs again this week. But look down at the RSI. The RSI has become extremely overbought, or an RSI above 80. And what I usually would suggest there is because momentum has been so strong in that direction, you would expect a little bit of a pullback, but then a resumption of that initial trend. And you can see during this uptrend, you've had a series of periods where the RSI has become extremely overbought, above 80. That's resulted in a pullback, but then a resumption of the uptrend. Again, here in June and July, extremely overbought, correction, and then we continue higher. Most recently here at the beginning of August, extreme overbought condition, a little bit of a pullback, and now once again we've continued higher. So what you're looking for here is a subsequent up move that is not supported by an extreme overbought condition, and that could be the end of this or the exhaustion point of this extreme uptrend that we've had in the in bond prices. So extreme overbought condition is something to look for going forward. If this sort of thinking is of interest to you, I hope you'll hit the subscribe button and also check out the other videos on the Market Misbehavior channel. Thanks so much.